Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 11th. Good to be with you guys here this morning. Kazam, Mark, Peter, Pooja, Trevor. Great to be with you guys. So where do I start? Hey, Dee, Kelly, great to see you. Lots on the menu. I don't even know where to start. So let's just go through yesterday's update. We had the dollar index, euro Oz, euro key, euro yen, dollar yen, all of those still of great interest, a little bit slow dragging. But the previous update, the Whopper on Sunday, there was just so much on the menu. So we still have euro CAD, sterling, Kiwi, dollar CAD, all in the back of last Friday's NFP, which we will go over, Aussie CAD and Aussie yen. Yes, I agree. Exciting pipping time, says Kelly. D, good morning to you as well. It is. Quick housekeeping note, guys. I apologize. I do need to cancel tomorrow's webinar. I went and broke my foot yesterday and need surgery, so I need to go see someone tomorrow about that, which may put a dent in things, but I will be back hopefully for Thursday. So we will still have our midweek strategy webinar with Jamie, no problem, on tap tomorrow. All right, so let's jump right in. Friday's non-farm payroll report was interesting. You did see a miss on the headline figure, but the underlying metrics were pretty darn good. Heading into the start of this session, a quick look at what the dollar is doing. You can see that the dollar is actually down against all of its major counterparts, save Kiwi. And while Kiwi is down 0.22%, it's still well above support. It's still within its weekly opening range. So I don't really have a very strong opinion of Kiwi. We did cover that early in the week on the Sunday update, and we will take a look at it today. Japanese yen, 11.45, that 111.45, still continuing to be a barrier of resistance. That thing still stuck below that. We'll take a look at the pound, Aussie, and euro, obviously, of which, by the way, Aussie is not really my favorite one at this point. It's kind of getting messy, but we will take a look. Okay, any other setups or trades that you want to look at, feel free to throw them on the message board. Hey, Pete, I appreciate that. Cheers. Okay, let's jump right in. There's a lot to cover. So before we do, here's what NFPs look like. I just want to cover this because, again, there's a lot of talk. What day was that? I think it was the 7th. Okay. 98,000. It was definitely a miss from the headline figure, but what we wanted to keep in mind is that while the unemployment rate did downtick unexpectedly to 4.5, labor force participation held at 63. Really positive underlying metrics. Okay. Obviously, average hourly earnings, 2.7%. You did see the downtick. That was sort of priced in already. And again, on month, you're not really going to stress that. So the downtick in the unemployment rate, the move higher, or the hold in labor force participation kind of softened that 98,000 print. And even though you got a downward revision to the previous one, it didn't really phase markets. That being said, as we've continued to stress, the Fed's major focus at this point, its dual mandate of price stability, inflation, and maximum employment, their focus right now is on inflation. So if anything, as long as the employment picture is not a disruptor and we're on course, you're going to continue to see markets really react more so to underlying inflation metrics, whether it's core PCE, which is the Fed's preferred gauge of inflation, or CPI numbers. So keep that in mind. We do get CPI later in the week on the 14th, which is interesting because, again, markets will be closed on Friday, guys, for Good Friday. It's a shortened holiday week here. It's interesting because they shifted the University of Michigan numbers to Thursday, but they didn't the CPI numbers. I'm not really sure why. But you also get retail sales figures on Friday as well. So it's going to be thin market conditions. Just keep that in mind. If you will be trading on Friday, you won't have full market participation here in the United States. That being said, let's jump into the charts. Here's what we look like on the dollar index. Turning from a very interesting spot, I highlighted this last night in the update. Here's what it looked like on the intraday chart. Here's what the daily chart looked like first. We were working with this assumption of this blue pitchfork for a while. And while we did break the lows, you did see some pretty convincing pivots. If you take a parallel of that, it actually touches these two lows in a perfect manner. So we kept that on. It just caught the highs we made yesterday. And on a close basis, you can see that that 100-day moving average continues to offer resistance. So we were looking at 101 as resistance. Obviously, we went as high as 101.20 and change. We couldn't close above it. Now the reversal close is right at that 101 level. Continues to be near-term resistance level that we're going to continue to watch. On the near term, here's what it looked like last night. We were testing 101 as support after making that reversal. Again, you had a pretty convincing downside break back below 70, a break below 100 spot 95, 100 spot 77 is sort of what we were looking at as near-term support, and we're there right now. Here's what the live chart looks like. 100 spot 78. We just literally tagged it. Here's the intraday chart looks like. That's just the former swing lows, but you can see nice near-term convergence here of some median lines. So if we break lower, look for the monthly open, look for 139. This, if we push lower through this and it's sustained, would be a near-term reversal for me. If we run back into it, look for resistance, into a move into 100 spot 39, that 40 region, the lows from last week. Key support isn't really down to 100. 2015 low day close, 50% retracement. You've seen some pretty convincing pivots there already, and you also have that slope. Remember that blue, as I just told you right here, the slope, these two touches, here it is in red, this trend line right here. So that converges on that region as well, heading a little bit deeper into the week here towards midweek. Again, it's a big call from here. It's more than 100 or about 180 or 80 pips away. Long story short, you're heading into that support region now, which if it gives out, in my mind, again, would suggest that you have a larger reversal at hand. So an interesting spot to start the week here for the DXY. We're testing near-term support into the US Open. Again, you're vulnerable for a bounce here, but the near-term bullish invalidation is this level, okay? If we break below this, I'm going to continue to look lower in the DXY. Now, what does that mean for the dollar crosses? It's not a carte blanche against the dollar crosses by any means. Certainly it means, in my humble opinion, that euro could get a little bit higher. I see Jamie's swing trade. He's looking for that move higher to sell. I kind of agree with him. I think it could go a little bit higher from our entry, but either way, you should be looking for a ceiling on this rally. Near term, the focus, I think, or the risk for the euro is still for a rebound higher. So we'll go over all the euro crosses essentially today are in focus for me as they started the week at some really nice levels. And then we'll go over the euro dollar later in the session. It's actually my least favorite at this point, but we will take a look. Any questions at the DXY before we move on? ICE dollar index. And here's what it looks like on the 120 minute. Okay, you can see pretty convincing break downside in the momentum signature here for the first time this month. Okay, this is the lowest levels we've seen in momentum. All right, moving to Euro Oz, which is the second update from yesterday. Here's what Euro Oz look like. Another one we've been tracking since last week. It hasn't made the move yet, but I do think it's something I want to watch very carefully into the open of the week. Really nice opening range, below resistance. The implications of the downside break are obviously pretty significant, specifically if you break sort of the neckline of what seems to be a head and shoulders formation here. Again, I hate calling it this early, but I know you guys are thinking it, so just want to recognize that I do see it. It's right there. But it means nothing until we break to the downside here of this slope, in my humble opinion. So the risk is for the downside below 41.72. Now, you basically tried to probe almost that high in overnight trade, but that's for me the threshold that I'm looking at. It's not just the former opening range high here from March, but it's also 50% retracement. You have slope resistance there and upslope median line resistance. So in any event, if it breaks above 41.73, 41.80, I think you look for the breakout back towards 43. But as long as you hold below 41.70, I do think you risk, a move lower here. So what does that mean for Euro Oz on the longer term? Really quick to take it back to the daily chart just to show you where we are. Basic slope resistance. Okay, these 2 points, ticket parallel, actually reference these 2 points. That converges here as resistance. You also have the 100-day moving average, which on a closed base has been very, very solid. And you have the reversal day close just higher, 41.60 or so. What is it exactly? 41.59, 41.60. So look for a break of this super, super tight range. And again, the downside implications, if you do see a break of that, are pretty significant for a correction lower. A conservative, measured approach of the head and shoulders break, if it were to, again, way too early to tell, would take you down as low as 35.80. Okay, a 100% extension, just to equal legs off, correctionary, would take you down to 138. So you can see the targets are pretty far out there if it were to break. That being said, we're still in the upslope, and this is the focus range. 40.50 on the downside, near-term support. 41.73 on the upside, key near-term resistance. Nice setup, okay? And it's giving you a nice opening range. See if this thing breaks heading deeper into the week. Any questions on Euro Oz, number 2? All right, Euro Kiwi, number 3, keeping with the Euro crosses. Here's what Euro Kiwi looks like here, and here's what we looked like last night. All right, so the basic premise of this trade was the focus on key support here at 52. Now, we've been following this one for weeks. We even were talking about the possibility for a more significant rebound. We got that rebound into 53.30, basically a 50% retracement of the decline. And here we are back at key support. So yesterday we were noting, again, watch 52. As long as we stay above 52, this thing continues to be supported. That's really the break that would shift the focus lower, but the shorts were at risk into 52. Lo and behold, this thing has made a pretty decent rally here. We're now trading at 52.80. Here's what it looks like on the near-term chart. Well, let me tell you again, the daily chart, the significance of this level, 200-day moving average, monthly open. Just below that, you had the 50 line for the current ascending median line formation and the monthly lows. So any way you slice it, 52 is definitely a level to keep in mind. On the near-term chart, all right, former swing lows, again, monthly open, and even some near-term downslope. Here's the reversal. Now, based on what price action is doing today, this would constitute, if we were to close at these levels, an outside day reversal off support. Typically, those can be pretty constructive. But before we get all excited, we would need to do something to clear. Let me just adjust this. No, we're good on that level. We would just need to clear this key range. That's 53.24 into 53.31. Again, basically the highs we made last week, 50% retracement, and that, my friends, would necessitate a break above this upper median line parallel. So yeah, I think you try to probe higher here in Euro Key. This is the focus range. If Kiwi breaks down, okay, well, we'll take a look at Kiwi dollar later, but if Kiwi breaks down, you could see this thing just pop right through 53.30, no problem. You'd be looking for 53.67, and you would just bring up a 786, but ultimately you'd be looking for a rally back towards those June lows. If Kiwi dollar holds resistance, this could be a bigger barrier than you'd expect. So right now, immediate focus, probably get a stretch higher, look for a reaction near 53.30. That's the breakout zone. And again, that's what would be needed to shift the focus back towards the upside here in Euro Key. On this one, I'd be watching Kiwi very, very specifically because it seems to be sort of the laggard here. And even on dollar weakness, it's just unable to make much progress, right? It's the only currency that's lower against the dollar today. So watch Kiwi, I think, is the driver here for Euro Key. Any questions on Euro Key? Nice outside day reversal off support. Momentum coming off 50. Yeah, pretty decent. All right. Number 4, let's jump into Euro Yen. You don't hear me talking about Euro Yen unless it's something exciting, but we've been following Euro Yen. Last time we checked it out was what? Back on the 27th of last month. So I provided you with a whole set of charts because it's been a while. Here's what the daily chart looked like, and it's just awesome because it's actually playing out really, really well. The focus range was right here, 116.64 into 117. And the significance of that region can't be understated, okay? It's the 50% retracement of the entire rally off last year's low. It's the 100% extension of the decline off of the highs. So again, my favorite confluence Fibonacci levels. It's the July high day close, which was the high day reversal close right here. So lots of technical significance. Add to that the 618 line of the descending median line formation, which has held the last 3 swing lows, also converged on this region. So now that puts the focus on a close below it to shift this thing to real, like, a break of support, basically. That being said, the short side's at risk into this zone. And in fact, you got a real nice probe, basically right into the center of that zone, 116.85, and a pop higher. Am I thinking to go long? Not so excited to do it just yet, but yeah, I think, you know, you had a long exposure opportunity last night. If you're looking for new exposure from here, I'd still be looking for a little bit more of a pullback to the downside again. Here's what it'll look like on the near term. Whoop. Here's what it'll look like. I put the wrong chart here, guys. Sorry about that. Where is it? Here's what it'll look like on the near term chart. That's dollar yen. Euro yen. Okay, here's what it looks like on the 120-minute chart. And this was the key region of support we were looking at, this being sort of the breakdown zone needed to keep focus lower. So we came right into the middle of this. Now I'm looking for a break of this channel. 118.40 is really what would shift the focus back towards the monthly open. And that's where the median line is. Here's what it looks like now. Okay, nice little rebound, initial move, nice move in RSI. Levels remain unchanged. The weekly open, initial resistance would be 117.55. The weekly opening range high lines up perfectly with that channel resistance, and that's at 118. This is a larger range ATR, guys. So again, it might seem like these targets are very close. This is a 120-minute chart, but certainly the ATR you got to respect on this one as well. So the average true range gives you, I'm not really sure, I don't really bring it up on this too often as far as trading view. We've got 180 pips on a daily basis, almost 200 pips. Okay, so just keep that in mind here if you're getting involved in Euro Yen. Major key support, 117, 116.65. I do still think you can get another probe into this, no problem. But I wouldn't, you know, be looking to initiate new short exposure, in my humble opinion. I do think you look for either a rally towards, initially you'd be looking for the weekly open and channel resistance, with the threat of that breakout giving you a little bit more of a reversal play. But right now, you got to respect this key near-term support confluence. That RSI was taken from 60-minute, Mike. Which RSI? This RSI? Vlad, nat gas. Let me add that to the list. Yeah, and we'll take a look at some commodities too for you, Vlad. But nat gas, let me add that. Gold, not so really interesting right now, but silver, we've been following that one. Oh, the ATR. I'm sorry. You're absolutely right. Well, there you go. It's not that big. It's smaller. I was thinking more of a pound yen type of trade. Either way, keep the ATR in focus, okay, when you're trying to get into these intraday positions. You don't want to be chasing like a huge lot if it's a smaller contracting ATR and vice versa. That being said, I am still holding a piece of that, yeah, Trevor, about 95-ish. Yep, so about a quarter of that. I am still holding a piece of that dollar CAD Just a minuscule piece of the initial position from last week. We'll talk about that in a moment. But always keep an eye on the ATR. Any questions on Euro Yen? Watch key support here, 116.65, 117. Also recognize one thing, guys, that the 200-day moving average is also at 117.70, which is just above the weekly open. So keep that in mind as well. Important for a close basis to see what that pivot does. Dollar yen, number 5, might as well cover that as well. Not really much to update. You know, we've been covering dollar yen for the last few weeks. You guys know my feelings about it, but just wanted to highlight that the range and the key levels remain exactly the same. 111.45 is a level we've been talking about for 3.5 weeks. It continues to be a major pivot. You got an early or a break late last month and then a quick pivot back. Ever since then, it came right back into focus. It's now also the monthly open. Really can't stress that level enough, guys. Every time it's come into 111.45, it's got a smack down to the downside. With the same respect, the lows from March continue to be rock solid support. Here are the last 2 rebounds that you saw off that. Really strong reactions. So you have a clear-cut, definitive range you need to respect, and that in and of itself is now the monthly opening range. We have to just look for that break. So, you know, like buy at support and sell at resistance is really not much to be done here. What is the broader focus for dollar yen? Well, I'm torn, okay? And this is why, well, let me take a step back. 111 into 111.45, this is the zone that we highlighted early in the year. You know, we kind of just missed it here again in March, or February rather. Here's the break, and now we're testing it as resistance, but we're still holding the lows from last month. So again, this key range, because it's such at a pivotal spot, this is why it's so important. A downside break, you're going to see this thing dump into what is that? 108.40s, 108.70s, 200-day moving average, slope support, 50% retracement, all converge down here. A topside breach, you know, you could see this thing as high as 113.80s again. So certainly the focus on this range for me holds a lot of significance, which is why I'm willing to sit on the sidelines. Some of the yen crosses look a lot more appealing to me right now. If I don't want to get involved versus the dollar per se, this might not be might not be a bad idea to stray away from this right now. That being said, near term, guys, this is our bread and butter. Very, very simple range. Light exposure. Look for a break of 111.45, 110.10. Questions on dollar yen? Going once, going twice. Okay, and that was last night's update. Again, not really much to update with the dollar yen, but some nice crosses here with the euros. The previous night's update, which was, again, a little bit more in depth. I just had a lot to spew out. I hope you guys don't mind. There's just so much that was to look at early in the week. So we'll start off with the British pound, and then we'll move through the crosses. But before we do, I just want to cover Euro CAD, which was actually the last one in here. Played out really well. We were looking for this near-term sort of break of this key support structure. Euro CAD looks like this. Certainly the CAD strength has continued to help. Also helping our dollar CAD trade. But just want to go over this real quick. Here's what the daily looked like. And here's the daily look like, you know, on Sunday. We opened the week at 141.91. Now, that was a confluence of the 50% retracement. You had the monthly open there. You had slope support there. And last week's close. I mean, it was all stacked up right there at 41.92. And that's why when we opened this week, the emphasis was really either on a downside break of that or a rebound higher. Obviously, we got the downside break, and it was pretty quick. Okay, and once you leaked back below 41.75, you're looking at 40.95, 40.92, which is exactly where we just tagged an overnight trade. And then key support into the December 2015 low. This is an area I'd love to actually get long if we get the final dip. I don't know if we make it quite that low, but I am looking for a little bit of a near-term recovery off of one of these levels. So while I'm not personally involved in this, guys, the near-term targets are still pretty clear, and here's what it looks like. The reason I'm hesitant to get involved in the short and to wait for the long is because this could also be all she wrote. You know, this is actually turns out to be an exact 618 extension of the decline and the 618 retracement of the ascent. Again, these converging Fibonacci levels of significance, specifically when it's the 618s and the hundreds, or 1618s and the 618s, when they converge on levels like this, and specifically looking back in price action, look back. Really clear-cut pivot in price. Support, pivot break, resistance, resistance, resistance. Really nice pivot. Converging Fibonacci levels. So look, 4024 is the max. That's my bullish invalidation level for the broader upslope of the formation that we've been in here off the lows. And I think we should be looking for some support as we get into this region. Again, that would give us a little bit more downside on dollar CAD, which would be great. If we were to get that dump, I would be out of dollar CAD by then. But certainly 140.24 for me is sort of big region, sort of a big region. If we were to get below that, I don't necessarily want to mess with this thing. You got another 100 pips to the downside, 139.28 before your initial target, and that would complete 100 off the high. It still could correct off that, but I wouldn't want to be holding the trade sub 140.24 on the long side. So looking to see if we can get some exhaustion here on Euro CAD to break or to convince me that we're reversing or we're going to see that near-term recovery. 41.95, same level, needs to give out as resistance. You got that 618, which was a very nice pivot, 618 line. Or excuse me, this is the 50 on this one, right? Yep, that's the 50 line. Has been a really nice pivot. Resistance, break, instant support, move off. That converges on the weekly and monthly opens all right here. Break higher, look for that rally. Sorry, Mike, regarding dollar yen, if 110 breaks, what would you do? We can go back dollar yen, sure. It depends. What are you asking me, Joe? Are you asking me with regards to new exposure, or if you're holding something? If it breaks 110.10, I don't, or 109.75 is kind of my max position. What is that? No, that's just a soft target. It's pretty much these lows. I really wouldn't want to be in this on the long side if that's what you're asking. I'd be looking for a dump into this region, 108.40, 108.77. That's an area at which I'd start to look for long. New exposure, Joe? So if it breaks through, look to sell bounces. If you're a real near-term trader like I am, then you're looking for a retest right back into 110 or 109.75 to get back short and look for that stretch down to 108.75. You got a 100 pip range to the downside. And this should be pretty decent resistance. We've tagged it so many times if we get it. So your exposure would have to be against this region. Or one other way you could play it, Joe, is if you miss the downside break, look for that dump to give you some possibility for some exhaustion down here. And this possibly would be a nice rebound play. And then we'd have to reassess the targets, take a new retracement or kind of readjust what the topside targets would be at that point. Joe, does that make sense? So for me, I'm looking right now at this key range. That's all the focus is. If we were to break 110, if you're quick enough to get some rebound plays, you could definitely play the downside near into 108.40. More likely be looking for entries down here for sort of recovery play. It's a pretty clean formation considering it's dollar yen. He says, thanks. Yes, you got it. You got it. All right. Any questions on dollar yen again or Euro CAD? That was number 6. So Euro CAD, look for near-term resistance right under 142. That's sort of the breakout zone we need to validate a reversal. Near term. All right. Jumping back into yesterday's report, British pound. Go back to the top here. Or this is the Sunday report, rather. So sterling is a very interesting setup. It's kind of been tough on an intraday basis to get involved or get excited about it just because of near-term price action has been dilly-dallying with this 24 region all the last 2 weeks. So 2410 into 2420, we talked about it last week. We broke it last week. It's a basic 38.2 and a 618 extension off the high. And to open up this week, it was near-term resistance right along the median line here. Okay, really nice pivots, support, support, support. Broke below it. I was looking for this to be resistance. Now it was yesterday. We rallied right off this region. We highlighted as key support 2360. We rallied right into it. And we closed yesterday below it. Now, over the last few hours here, I don't know what to do with that. You know what I mean? I'm not going to get excited until we break basic trendline resistance off the highs. So don't get faked out. It's British pound, again, notorious for the throwover, false breaks in each direction. So just be very, very selective on sterling until we get a little bit more of a definitive move. I don't like what I'm seeing here. So I still think this thing could possibly dump and just wash out everyone before it moves higher. We've been talking about 23 being the Goldilocks zone for weeks, right? Specifically on the daily chart. Just to bring this into focus, 123 would be right here. Sort of a dump into the 618. You got a nice zone right against the median line here that you could try to get long against and look for the broader upside play, ultimately looking for a breakout, to be honest with you, in sterling. But on the immediate approach, I don't know. Is this all she wrote, or do you still have that move lower? Now, based on slope, this is going to become less and less important because now you're starting to drift off. But as of now, still, I wouldn't be too excited about the long side of sterling just yet until we get out of this. I'm very constructive. I do want to be long. I just need a little bit more to kind of convince me that the downside recovery off the highs from last month is done. Okay. In fact, it wouldn't be outside the realm to continue higher from here. If you look at this sliding parallel, same slope, support, support, perfect resistance, a little dilly-dally there, nice support. Still puts the emphasis on the weekly open as near-term support. Now, on a topside break of the trend line, the initial target would be the monthly open. Okay, that would be like 125.40. That'd be just the initial target if we were to break this trend line to the upside here in pound. Questions on sterling? It's kind of a little disappointing that it's a quiet week as far as data is concerned too, so we don't have too much to look forward to. Let me just check the sterling docket real quick. So here's what we got this morning as far as the CPI numbers. It came in broadly in line with expectations, so you didn't see much market reaction, even strong on the month-on-month, but no one's going to stress that. Core CPI is what missed, and we were expecting a downtick, but the downtick is a little bit larger than expected. Kind of left sterling, I don't know, with a I don't know type of move, which is kind of what we're doing right now. So let's see how this pans out. Look for a reaction near that trendline resistance. Moving deeper into the week, we do have those jobless claims. I forgot about that on tap tomorrow. So keep that in mind for the UK. Looking for a hold at 4.7%. Again, about 70,000 jobs. Okay, that was number 7. Moving right along, number 8 is Kiwi. So here's what Kiwi looks like. It's kind of a blah story right now, but you know what? It's still at a big, big level, and this is what we highlighted on Sunday. To be mindful of the fact that we'll come back to Aussie. Here's what Kiwi looks like. To be mindful of this level at essentially it's the 618 or the 786 retracement rather, 69.33. We talked about that level last week. The focus region is still that same zone. It's now kind of the weekly opening range zone. We need to clear the monthly open to clear a reversal higher. With the same respect, a basic break below this 3-point touch trend line, 1, 2, 3, sort of confirms it. Okay, if we break the opening range lows for the week, we break that trend line, you're looking for a dump into 68.60. You're looking for a dump into the yearly open. That brings you down in 68.28. That's the yearly open from last year. So the implications on a downside break are pretty big. With the same respect, that up basic trendline resistance off of the February high, look how many times we tagged that. I hate these really steep slope guys because the breaks are very hard to call, and the steeper it is, the more prone you are to getting false breaks. That being said, can't ignore it. Once, twice, 3, 4, 5 puts the emphasis on the opening range high that we made so far. So again, another trade where despite the fact that you're seeing dollar weakness with the DXY pulling off resistance pretty abruptly, right? Kiwi really unable to capitalize on that, and that tells you something. And that's why Euro Kiwi is something I'll be watching as well, because once this thing finally makes a definitive break, I think it's going to put a lot more pressure on that Euro Kiwi in either direction. So watch for a break of this range. You know, no change to any of the levels that we highlighted here on Sunday, and we're still going to continue to look for some more definitive price action here in Kiwi. Risk remains for a break lower here, sub 69.30. That is number 8. Okay, number 9, dollar CAD. Tomorrow is crude inventories. Again, keep that in mind. Today we get the outlooks, which is not going to be a major market pusher, but certainly crude inventories could. Here's what dollar CAD looks like on the intraday. So it turns out that this range that we've been talking about and the levels, which remain unchanged, are starting to take shape in more of a consolidation type of play. Here's what it looked like, excuse me, on Sunday. So last week we initiated a short both on the swing side of trades. We talked about this and we highlighted it on the intraday chart. I got a couple of plays on it, peeled off most of it on the back of the Friday print. Obviously on Friday was an awesome release, by the way. You know, we always talk about these double whammy Fridays when you get Canadian employment numbers and NFPs at the same time. Well, geez, CAD numbers really blew it out of the water again. Okay, you got a 19,000 print, 19.4 thousand. We were expecting just 5.7. Unemployment did uptick to 6.7% from 6.6, but labor force participation also increased as well from 65.8 to 65.9. So as we always continue to highlight, you know, these increases in labor force participation will always be a welcomed development, and will tend to overshadow upticks in unemployment, because as the labor pool increases, it'll put that pressure on the broader unemployment number. So really good, strong print again for Canada. And you saw that the U.S. numbers, while the miss was the headline, it was more or less in line with expectations. It prompted that nice drop in dollar CAD to our initial target, 33.45. That's kind of where I took off most of the short. I still have a small part of it left in. This was the secondary target here at the monthly open. Okay, the lows from last week. Okay, the range lows that you saw into late March. That's what you need to clear to really see some serious downside here. I'd be looking for like 31.80 on a break from there. 32.50 would be a nice 50 break, but I wouldn't, you know, stress that target. I'd be more so looking for a move down near 31.85, 32. If we were to break this low. At this point, you know, my stop is at the weekly open, which is well in the money. So if it, you know, pops through and it, you know, rallies right through the weekly open, so be it. If not, you know, I'm going to continue to favor, see if we can see a downside break of this consolidation formation. But keep in mind, you could see a rebound off this region. This thing could continue just to go into the apex for a while. So the impetus is really on a break of this key support zone. Okay, it extends down into 32.85. Questions on Loonie? No changes to any of those levels from Sunday. Okay, a couple plays here for some Aussie crosses, and then we'll get into the commodity block. Aussie CAD at big support. This is a pair that we covered on Sunday. Here's what it looked like on the daily chart. We talked about that 99.88 level. What was it highlighted? Here it is, 99.75 into 99.90. Big zone of support, big daily level. That was the key region to keep in mind. Again, on the daily chart, really highlighted by where are we here? You had the 200-day moving average, the 100-day moving average, the 50% retracement, some former swing lows all stacked up right here. This is where we closed last week. Look for resistance at 100 spot 0070. That's kind of exactly where we made the opening range high. And the low now is right here at this key support. So what's up with Aussie CAD? Well, the rebound hasn't been super strong. I am looking for recovery in RSI back above 30. I still think it can dip down to 99.50 on a slope basis to catch this lower parallel. There's some former swing lows and some former swing highs. They're pretty much just former swing lows. Oh, there's the swing highs into this region, which sort of converges on the lower parallel. And this parallel has been pretty decent. Okay, I know we probed below it here, but again, if you take a slider, you could see some pretty nice moves. So long story short, I wouldn't be surprised if it dumps a little lower, but I'm looking for some exhaustion. I'm looking for some divergence, and I do think you could see, the downside is at risk into this support zone. Look for a rebound off this zone. If it breaks, it's, sayonara, I guess. There's like nothing from, I guess, a Fibonacci standpoint. Year 618 comes in at 99. I kind of knew that because I looked at it earlier. But you do have some slope that comes in just ahead, 9920. But this is an initial area of which I think you do need to respect for some near-term support here in EuroCAD. Excuse me, in Aussie CAD. Any questions? A key barrier of support that we talked about on Aussie CAD is still the zone. We're there. Respect it. Know it. Thanks for the levels. Great trade on dollar CAD. Cheers, Pooja. Yeah, it's working out pretty well. Again, I'm starting to get on the defensive, right? We're up well over 100 pips on that. I'm going to try to get a little bit more on the defensive with that trade because you're coming into crude inventories tomorrow. It's a light shortened holiday week. Could get some more volatility, so I don't want to dump it just yet. But in fact, if it does give us a rally back towards the consolidation range highs, you probably could get another short in on that. Let's see if we can get some play off these inventories tomorrow. Okay, so that's Aussie CAD. Aussie Yen was also a trade that we highlighted on Sunday. Here's what the daily chart, the 240-minute chart looked like. It was really the 82 handle, or excuse me, the 83 handle into 82.97. We've been following this one very closely for the last couple of weeks. Last update was just a few days ago, but we've been still continuing to highlight that key support. That's still where we're basically fighting. Okay? We're challenging it right now. I don't want to necessarily call this a break. I would need to see a close. Yesterday's sort of almost doji looking rejection of the former swing lows from December certainly to me is something that near term looks bearish. So you could see another tag of that median line. I would need to see a close below 82.97. In such a scenario, you're basically looking for 82 as a near term target and 81.30. Remember, we always talk about this, when a market closes or breaks the downside of a descending formation, those can typically be the sharpest parts of the move. Okay, Aussie Yen tends to be a very risk-sensitive pair. Watch at risk assets as well, i.e. equity markets and global markets. So if you do see that downside break, I think this thing could wash out pretty quick. Again, that September low, it comes in just ahead of the 200-day moving average. But those would be two targets I'd look at. I have 81.36, obviously, which is, the 50% retracement. So some interesting levels, really testing, flirting with a break of disaster here in Aussie Yen near term if this thing continues lower, but watch today's close. Hi, Mike. Could you look at Aussie Kiwi, please? Thanks. Let me add it to the lists. We are Aussie Kiwi. No problem. Gotcha, Peter. Any questions here on Aussie yen? It's a yen cross. I'm not really a big fan of it. Here's Aussie dollar, by the way, which is why I'm not really like crazy about Aussie yen either. Aussie yen, it came into support. This is the level that we looked at earlier in the week, but it didn't do much. It's not rebounding and it's not breaking. It's just sitting there. So I don't really know what to do. You know, I'm kind of just going to sit this one out right here. 74.91 is former swing lows. You had that slope support of the descending channel that we're currently in. You're setting a pretty nice weekly opening range. It's Tuesday. It's still pretty early. Let the range pan out. Risk remains lower, sub 75.47. That's initial resistance. But that's sort of what I'd be looking for a break to get a near-term recovery. And with what the dollar index is doing, that's sitting at support. So everything's kind of lining up pretty well. If dollar index breaks support, look for that near-term pullback in some of the dollar strength to give you a little bit more of that pop in Aussie. Another cross I'd like to play. Ultimately, you'd need to see a rally towards 75.90 for this thing to get bullish again. But near term, I do think you risk a little bit more of a rebound. Questions on Aussie? Now, Aussie, you do have employment data that's on tap tomorrow, so that might give us a nice little play here for Aussie. If this range holds, it might be a nice trigger for the opening range break for the week. Okay, so that is Aussie dollar and Aussie yen. Number 10, 11, and Aussie dollar was number 12. Let me jump into your questions here first. So Nat Gas, that was for Vlad. Let me take a look at Nat Gas. First time taking a look at it this week, so let's see where we stand. Okay, that's not needed. The monthly open still going to be near-term support along with some of those swing highs. So I'd still be looking somewhere around 309 into 311. Okay, because that's sort of a nice little butter zone there. Also have your close lows from earlier in the year in January. You basically came off slope resistance. Support, break, resistance, break, support, pivot, resistance, resistance, support. So you basically did come off a decent slope line. Question is, how deep does the pullback get? You did have slight divergence into the highs. Okay, so the daily chart looks like it's marking some sort of near-term exhaustion play. You also had an outside day reversal here at the highs, which is pretty... I'm sorry, I'm corrected. That's not an outside day reversal. Okay, let me see what it looks like on the intraday. Near-term trigger and price here on the daily RSI signature as well. Bear with me one sec. I just want to see if there's any slope here worth working with. Nope. Yeah, we're grasping at straws here. Look, it's definitely at risk for a reversal. And the story that we just walked through on the daily chart is what's suggesting that. A deeper look at near-term price also continues to suggest that. This is the weekly open. Kind of just made a break of the weekly opening range lows, the initial opening range lows. I'd be looking for a move into this zone, okay? That's still, we just highlighted this zone on the daily chart. Again, take it back to the intraday. When these levels all line up, it's something to pay attention to. Again, your monthly open comes in basic 236, nothing fancy. Basic 236 off the low and some former swing highs. All of that converges on what we were looking at here on the daily chart, and that basically gives you like 311 into 312, 309, as we noted earlier, is going to be those former swing highs, but it's also going to be, you know, as far as the near-term chart, if we just take in a parallel off those former swing lows, same slope, it's going to converge on that region. So I'm going to call it 309 into 311 as the near-term key support here for natural gas. I would need to see a break above 324, again, essentially to get back on the bullish side. That would be a break of the opening range highs for the week, this near-term trendline resistance, as well as that 50% retracement again. And the reversal day close, wow, there's just a lot there. Near-term support. Oh, this is what you need to clear to get back on the bullish side. Does that help, Vlad? Does that make sense? And certainly on the immediate front, and again, we're getting real micro here. 308 extends to 1618, so I would even leave that too. It says, absolutely, thanks. Cheers, Vlad. Always a pleasure, sir. We had another question for Aussie Key from Peter. Peter, here's what Aussie Key looks like. Let's take a gander. Aussie Key. You guys get me excited about trades that I haven't looked at yet. Look at this thing. Okay, wow. Right into the butter zone, 107.54, 107.70. I guess that's the last time we talked about Aussie Key. By the way, guys, we've had our developer give us a little bit more on this search engine. The search has been having little bugs lately. It's all fixed up. So we have awesome search functionality. If you ever want to look up any specific currency, it now categorizes it in proper order from earliest to the latest, most recent updated. So if you go to Aussie Key, you can see the most recent updates, both from myself and Jamie, all congregated in one little list. So a nice sort of addition there. But here's what it looks like the last time we covered it on the 27th. Whoops. And it's that downside channel, 107.54. This zone right here, bearish invalidation was up at the weekly open. It held, and we came right there, and that's where we're trading right now. So a little over almost 2 weeks later, it took it a while, but you inevitably got that drop. So where do we go from here? We're right here. Look, you've got a pretty convincing weekly opening range against support. That's like my ideal type of plays, okay? A break of support, sub 70, 107.54. You have that 100 there. I don't want to stress it. At this point, I'd probably be even more so inclined to drop this key zone down into this just to account for slope. But just keep your eye on this, just as sort of maybe an interrupter. But if we break sub 107.54, I do like this a lot lower. Look at the daily chart. You got really nothing till down here, 106.62, 106.72. So as far as Aussie Key, Pete, I mean, you're up against key support. You know what I mean? I'd rather be playing rebounds off this on the long side, just on account of what I'm looking at with Kiwi and Aussie, to be honest with you. Respect the downside break below 107.54. Near term, I'd rather be playing longs against that region. As far as resistance is concerned, you have this slope, which I'm not too crazy about, but at the end of the day, if it breaks the opening range highs for the week, Your initial play is just to look at a basic retracement off that initial high. Okay, that would give you like 108.60, 108.90 as initial targets. Actually, take that back. Work it from the major high. If it's correctionary, you're going to want to play that entire range. So that would bring the 38 to, hey, 108.60 again. It's even better. You got overlap. Perfect. So those are the levels I would play in the event of a topside break. But right now, the weekly opening range is taking shape right above support. So respect that near-term range. Pete and Aussie Key. Does that make sense? Does that help? Pete, let me know if you have any specific questions here on Aussie Key. Says, thanks, Mike. All good. Right on. So a quick run through. We have a couple of minutes left, guys. If you have any other questions, do feel free to throw it on the message board. A quick run through on some of the commodities. Here's what the gold trade looks like. I'm going to put a piece out on daily effects in just a bit. You know, I'm not really a big fan of where we're starting the week, but it's kind of going to be tricky here. It's going to be make or break. Okay, the 200-day moving average has been offering resistance on a closed basis for the last 5 attempts. So if today's attempt is a break and close above, I would be looking for that final move into 1277, 1278. Now, I think a lot of this is going to have to do with whether the dollar breaks to the downside. And you're going to have to kind of pay a little bit more attention. I'm not really interested in any new fresh long exposure on gold from these levels, to be honest with you. It's tough to get in against any type of major low. You know, like we always say, it's not always about knowing the direction. It's about having a setup, a game plan. And right now, I think you're chasing if you try to get into any fresh long exposure. So while I do think, you know, if we close above this level, I do think this thing's going to rip into 1278. That's really a big major zone. Guys, 1278, 100% extension of the first leg up off the lows. 618 retracement of the decline off the entire, you know, sell-off from last year's high. Basic trendline resistance extending off of last year's high. But go out even further and you have trendline resistance from the all-time record highs in 2011 converging on that region. So massively critical. And that's why for me, you know, trying to get long into that region, I don't know. I just can't, I can't really get too excited about it. So I'd be much more looking for exhaustion there. Immediate risk is still higher into 1278. All right, so that's the basic gist of what I'll be presenting, but keep those levels in mind. Again, on the near term, we were looking at this slope last week. Hasn't given us much play or pivot, so don't pay too much attention to it, but it does give us near-term resistance at 1268. Again, 1278, 1277 is sort of the major key target of resistance. A break below the monthly open is what would be needed. This near-term support, and would shift the focus lower here in gold. A quick look at crude prices. Look, a lot of people are starting to get super excited about this as well. I personally don't have anything on the near term until we get into like 53, 54.30 still being a major key zone of resistance. We've all talked about that. Look, guys, I didn't expect this recovery to quite get this high, okay? I was looking, you know, we talked about this being an opening range break for the year. Certainly that shifts the focus lower. You know, near-term bearish invalidation on our part was 51.60. That gave out last week. You know, I'm not trying to fade this until I see a really convincing turn in momentum and price. So crude kind of off the menu from an intraday standpoint from my point of view. Quick look at EuroCAD if possible for Puja. EuroCAD. We covered that, right? But yeah, let's take another look back. Is it on the move? Okay, the rally is gathering a little pace. Yeah, nice little pullback here and rip to open up the U.S. session. Like I said, Pooja, 141.71, 141.95, that's your key zone. You know, I do think you possibly get into that. Now, that's kind of the breakout that I would need to see to continue favoring the long side. Otherwise, you know, remember that 40.24 drop I think would be a sweetheart deal if we get it. But the initial upcoming here, you need to respect that you're still, you know, you're still below the monthly and weekly opens. As long as you get below into that, I wouldn't get too excited about the long side. This is the breakout to get that thrust higher. So maybe a boom, 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 and then rip. Long story is right now the focus is on this. Whether this breaks higher and then pulls back into support would be an opportunity to buy, or whether this holds and breaks into support would opportunity to buy down here. If you're holding longs, 41.75 into 41.92 is where I'd start to shave off that position. That's the level that we were talking about yesterday, right? Okay. Quick review there on Euro CAD. Crude we touched base on. Silver. This is the one. This is the one that we really. Oh, that's $ZAR, by the way. I think it's teetering out. You might look for a pullback there too. But silver is the one I think that has been so clean. We talked about 1833, 1839 all last week. It looked pretty hairy. Got it really. This thing was trying to clear the opening range highs for the year, or just the range highs for the year, let's just call it. Then you had that big old outside day on a real strong conviction failure to hold above that 1838. Here's the whip back. I think, you know, the pullback where it found support, look at this thing. It's this disgustingly clean. You don't get commodities playing this nice. Median line right here, 50 line. Support, or resistance rather, support, break, instant resistance, pivot. Look at that support touch. So yeah, look for the recovery, possibly as high back as the weekly open. I do look for a new low here in silver before resumption. But near term, you know, you could get this rally getting back into the weekly open. I'd look for some exhaustion here. Ultimately looking for the playback just to give me sort of a near term correction lower towards the lower parallel to get back on the long side. But I do think you risk a new low here in silver as well. Questions on silver? Okay, I'm going to wrap it up here. Again, a quick reminder, no session tomorrow. The midweek strategy webinar is still on tap, so no change to that. I will see you guys bright and early, God willing, on Thursday morning. And I will keep you updated. As far as Mike, how do I register for the dip and rip alert? Joe, we have a beta test version out for the alerts right now. If you just subscribed, we will have it open to the rest of our subscriber base within the next week and a half. Right now, it's just for the beta users. I don't have any way of adding people as it stands right now, guys, but everyone will be able to sign up themselves right online, right on the site, hopefully very soon. Yeah, Trevor, Pooja, I appreciate that. I appreciate all the well wishes. I will keep you guys updated. Again, best of luck trading. Keep it light as you head towards the end of the week. Again, we'll talk again on Thursday morning, but keep in mind that, you know, you're going to see that market participation start to dwindle down as you head towards the holiday weekend. Best of luck trading. See you guys on Thursday. Cheers.